With some business stories, as the final lap of the Monetary Policy Committee meeting of the Central Bank of Nigeria for the year kicks off today, the continued depreciation of the Naira and rising inflation despite interest rate hikes remains top agenda for deliberations. The Monetary Policy Committee, as usual, will consider both domestic and external factors fueling inflation in making a decision on monetary policy rates. The Central Bank of Nigeria has raised its monetary policy rate, the benchmark interest rate, 3 times this year, but inflation has remained unabated, rising to 21.09% in October. Meanwhile, the Naira has continued to depreciate against the dollar at the parallel and official market rates following the persistent shortage of the greenback occasioned by the decline in inflows, high import demand, oil theft and petrol subsidy, among others. Recall that at the last meeting on September 27th, the MPC raised the policy rate for the third straight time by 150 basis points to 15.5%. Join us for more live, of course, on live updates of the outcome of the deliberations on Business Nigeria tomorrow at 2 p.m. Still in the financial sector, credit by commercial banks to the economy rose by 33.45%, hitting 63.48 trillion naira as of October 2022. Well, that's according to the latest report from the Central Bank of Nigeria. The CBN, in its money and credit statistics for the month of October 2022, disclosed that net domestic credit banks credit to the private sector and net credit to government stood at 40.80 trillion naira and 22.68 trillion naira respectively. The report also shows that when compared with a figure for September 2022, banking sector credit to the private sector in October increased by 294.93 billion naira. The banking industry credit to the economy, especially to the private sector, has maintained an upward trend in recent years, occasioned by policies that the CBN introduced to encourage deposit money banks to increase the lending to the private sector as part of its efforts to boost economic growth. The International Monetary Fund has warned Nigeria to brace up for higher food prices, risking the 2023 due to recent floods and higher fertilizer prices. The Washington-based lender, in a report, disclosed that the effects of recent flooding and high fertilizer prices could become more entrenched, impacting negatively both agricultural production and food prices in 2023. It adds that the volatility in the value of the Naira and the federal government's continued dependence on the Central Bank of Nigeria for financing its budget deficit and climate change are also risk factors that would affect the country's economic growth for next year. According to the National Bureau of Statistics, food inflation will hit 23.72% on a year-on-year basis in October 2022, with inflation on certain food rising to between 50 to 100% in the month under review. The carbonated soft drink subsector of the Manufacturers Association of Nigeria, MAN, has raised the alarm over the federal government's proposed 20% ad valorem excise tax on non-alcoholic beverages, covering the widely consumed carbonated soft drink segments. Well, heads of the sectorial group of MAN are in a statement posited that such a move will spell doom for the sector, as the effect of the prevailing 10 naira per litre tax regime is already crippling the sector with its biting effects on their businesses. The group maintains that industry studies already indicates the impact of a prevailing 10 naira per litre excise tax effective between June and August 2022, which shows an 8% revenue decline as the direct result of excise duty implementation. The soft drink manufacturers subsector of MAN, which accounts for 33% of the entire manufacturing sector in Nigeria, therefore called for the suspension of the devastating excise tax being proposed by the federal government to forestall the collapse of the industry, adding that the 10 naira per litre tax has become burdensome with the high cost of operations in the country and its constituent elements.